Welcome back to Golden Rule Radio, your weekly podcast where we talk about the precious metals markets and everything that affects them. Today, we are still stuck in a range with gold and silver, but specifically gold. Gold's in the 3% range that we talked about last week, between 1170 on the bottom side and 1210 on the top side. So which way we break out of that range, I think, is going to be very important as to which direction we're going to go with the market. And then on the obverse of it, the dollar. Today, we're going to highlight a couple of ratio charts. We're going to highlight the gold divided by silver ratio chart because why?
Because, Robert, when push comes to shove, all that matters is how many ounces are you accumulating over time.
Good answer, Miles.
I mean, realistically, don't we all just want the pile to get bigger?
Sure. When you look at the gold-silver ratio chart, you're only going to see the gold-silver ratio pushing up into this range where it is right now at about 84. That ratio is important where it is today because it doesn't happen very often, but we'll get to that in a minute. Currently, we're talking about gold. Gold's in a range.
Yeah, gold is definitely still stuck in that range, but I don't know if stuck is the right word because we're seeing a lot of movement. You know, we had that three drives pattern up. We got up into just below the 1220s. We had divergence. So it's not unreasonable to see it come back here. We've got a fib at 1186, which it did bounce and has moved up from. We're back up in the 1190s. And I think this is where we're starting to see that divergence between gold and some of the other metals and markets. Because you look at some of the white metals, you look at things like copper, things like corn. While they're all trailing down, gold does appear to start stair-stepping up here over the last couple weeks. And that brings us back to, again, the thing we're going to talk on here in a few, ratios.
Meanwhile, silver tends to just be lagging here, and again, get into the ratio discussion. This might be a good segue, but silver to me is more of a barometer of economic viability and inflation concerns. Okay, so if we're looking at the technical, that's one thing, but looking at the macro and the fundamental, it's either going to respond and track with gold, or it's not going to as a result of economic or monetary concerns. The monetary concerns right now, as always, are inflation versus deflation. So when inflation is the primary concern, you tend to see silver react and climb. When deflation is the primary trend, then you tend to see it soften, even if gold is moving counter to the currency. So, Robert, I don't know if that leads to any thoughts. You're over there nodding.
I just wanted to say this is the best time that it's been to buy silver in the last few years. And it's sitting here pushing down right into the previous lows. This is the best time it's been to buy in a long time.
Why is silver such a discount? I think that's really what the listener wants to know. I talk to people on a daily basis. I can't believe silver hasn't turned, okay? And I'm telling you that the reason it hasn't is because of the deflationary moves that the Fed is taking, okay? People aren't convinced that the economy is so healthy that inflation is a primary concern. The Fed can come out and say they're going to raise rates because inflation is a concern, and it's a mild concern. So they're taking deflationary steps, and that, to me, keeps silver from narrowing that gap between itself and gold.
Are you saying that the policies matter? Is that what you're saying? And so we should focus on the people who actually influence the policies?
Yeah, and let's be realistic here. I mean, the Fed's definition of deflation means just slightly less inflation.
That's right. It's under their target inflation of, 2.3%.
Right.
So anytime it lags behind that, they're not happy. Anytime it starts to get too far above that. Now, that still means that you're losing 2% on your dollar every year. I had a client say today that the dollar is strong only in the dollar index relative to other currencies, but that still makes it the healthiest horse at the glue factory.
Well, and that does segue right into our ratio discussion from earlier, because you look at this divergence between gold and some of the other metals, you look how the dollar's reacting to gold. So I think this is where we're starting to see that segregation between monetary assets and investment assets, because we bring up something like silver, or we bring up the platinum-palladium ratio. And when you look at the gold-silver ratio, with gold actually starting to inch back up, silver is still putting in those lows over the last, 10 years.
And more importantly than the platinum-palladium ratio is the gold-to-platinum ratio, because that truly is your monetary metal versus your industrial metal.
Which I believe we're at a point that we have never seen before.
Right. No, this is the lowest. This matches the lowest, and we're going to throw that chart up here like Robert told you we would. Platinum's actually up today, $7. Palladium's down $8. That's the type of trend that we expect to see happen too, is that platinum eventually outperform palladium. One day does not make a trend. I'm just saying that's what would narrow that ratio back down and actually expand that platinum to palladium ratio into that range where we're looking for it to go 2, 3, 4 to 1.
So you're seeing the currency, the US dollar, you're seeing gold really acting counter to each other on even a day-to-day, hour-to-hour basis right now. But then you bring in the Dow, and you see the Dow pushing back towards those all-time highs again. You bring in palladium, which is up, but then platinum's coming down, copper's coming down, corn's coming down, silver's coming down. So if you can navigate these waters and play those ratios against each other based on the historic averages that Robert brought up, based on all-time historic averages like the platinum to gold ratio, then you get back to my point. You can make the pile get bigger without having to add any more money. And that's the goal I'm always looking for. How can I make money without spending money?
We focus a lot of our energy on the technicals on this show, but we should state we are a fundamentally based group because mainly the current monetary system is the largest Ponzi scheme in world history.
Yeah, when you have 47 years of corporate experience in the precious metals markets, you can draw off of that fundamental base, right? And so what ends up happening is you can look back 50 years, all right? Gold has averaged a return of 7% a year over the last 50 years.
7% a year.
7%
annualized,
a year.
right?
Now look at what your currency has done. Look at what saving in the dollar has done. We talked earlier in the show about losing 2 to 2.3% is the stated objective of the Federal Reserve every year. So you're sitting in $100,000 in cash in your bank account, okay, excluding fees and everything else. You can't get any return on that money right now. So what happens? You have $98,000 in purchasing power a year later. That's in a really good year, and that's with them accurately reporting the inflation numbers. That's why you own gold over the long term, because your cash is robbing you.
Yeah, so the $98,000 that you're talking about there, Tori, expand that over 5 or 10 years. And it doesn't go down just by 2,000. It goes from 98 down to another number, down to a lower number.
Well, that's why since 2000, your $100,000 now has about $60,000 in purchasing power, okay? Gold, in the meantime, has gone from $350 an ounce up to $1,200 an ounce, and everybody's complaining because there's not a lot of action in the market. Are you kidding me?
Well, and again, that comes back to the fundamental reason as to why you buy gold. If you want to invest in gold, take advantage of some of our swap ratio trading and historical average pricing against each other. But investing in gold and owning gold for fundamental reasons aren't the same thing. So you get a lot of people that come into the gold market in 2009, 2010 at $1,600, $1,700, $1,800 gold after taking a 50% loss in the equities market and expect it to fix the problem for them. So then the markets go and do what they're meant to do. Precious metals like gold continue to just outpace that inflation rate over time. But because you're trying to fix a problem the wrong way, you're not going to find the solution you need. So that's why we like a balanced portfolio. That's why we like owning gold for the right reasons, for fundamental reasons. And we like owning things like silver or platinum, palladium, taking advantage of swap ratio trading for the sake of investment. And that's where our whole concept of the investment triangle comes from. Savings, growth, investment, spending.
Well, and it's not just an investment play. It's a way for you to end up with more ounces of gold later. Buying silver and platinum right now have the primary motivation of getting you in more ounces of gold later.
Sure, everything comes back to making that pile bigger. So following last month's non-announcement coming out of the Fed, we have another one coming up, meeting on the 25th and 26th, and that will certainly be something to keep an eye on, especially if the dollar continues to linger.
Yeah, we'll see who wins. Hawks or doves, and there's been a lot of battle between Trump and Powell. I'm as interested as anybody to see what happens. I still lean towards another rate hike.
I think they can squeeze one last rate hike in before the election coming up in November and certainly deal with the fallout prior to people going to the polls. So I agree. I think a rate hike is very likely coming around this month, especially with the Dow probably testing all-time highs here in the next week and the U.S. dollar not doing much of anything.
Well, that's it for this week's show. Appreciate you listening and watching again. If you like this program, please give us a thumbs up. You can also follow us on Twitter at ICA Gold.
Head on over to Facebook at McAlvany Financial or our website, McAlvanyICA.com. And as always, you can give us a call at 1-800-525-9556. Thanks as always for listening.
Have a great week.